It was there that I learned more about accounting, about businesses that are struggling, and the processes once they become deemed insolvent. If you're an entrepreneur, you're a risk taker, you move fast, you fail fast, you're your own boss, you're a hustler. And I think people realize that, hey, I can work from home and earn passive income and still have my life with my family or my hobbies, and I can have autonomy. The biggest skill in e-commerce is having the ability to create a brand, because a brand creates defensibility. Once you have defensibility, you can differentiate yourself from other e-commerce brands. Whenever I'm talking with a founder, I'm ticking in my mind already, okay, is this sustainable? Is it profitable, right? Is it scalable? Is it something that a buyer can 10 times this, 100 times this? Is it transferable? Is the business completely dependent on the founder, or do they have operations in place?
Welcome back to Business Unbound, where we dive into conversations with visionary leaders from every corner of the globe to bring you insights, inspiration, and the real stories behind success. I'm your host, Florian Hoff. Today, I'm joined by Dominic Sullivan, a senior advisor in mergers and acquisitions. Dominic's story really fascinates me. Dominic spent the first part of his career in the world of high-stakes corporate M&A, high finance, advising on turnarounds, restructurings, and transactions worth up to $5 billion across Europe, the Middle East, and Australia. But then Dominic made a choice that might surprise you. He walked away from billion-dollar deals to focus on helping individual founders and first-time buyers navigate acquisitions of online businesses in the 6 to 7-figure range. Today, Dominic is a senior M&A advisor at Flippa, a global marketplace for buying and selling online businesses. He's also the co-host of the Digital Dealmakers podcast. And here's what makes our conversation today particularly timely. There's a growing movement of professionals, many of them sitting on capital from corporate careers, who are looking at online business acquisitions as a path to financial independence. They are attracted by the math. Buy a business for 2 to 3 times annual profit, operate it or hire someone to run it, and then build a portfolio of income-generating assets. But the gap between that vision and execution is where fortunes are made or lost. Today, we are going to cover both sides of the equation. First, how to think about acquiring online businesses as a wealth-building strategy, what the realistic timelines and business models look like, and the framework Dominic uses to evaluate deals. Then we'll flip perspectives and talk about what founders should be doing 12 to 18 months before an exit to maximize their sale price, how to run a competitive sales process, and the mistakes that cost sellers a fair share of their potential value. In today's conversation, Dominic will share his insights, lessons, and practical frameworks. And whether you're thinking about buying your first online business or are preparing one to sell, this episode features masterclass level insights from an insider in the online business world. This is Business Unbound. Let's dive in. Quick moment of honesty. Business Unbound is brand new. We are in the early days of something that I genuinely believe in, a show dedicated to real conversations with forward-thinking business leaders and inspiring individuals who are having a real impact on this world. And that's where you come in. I need your help. If you're watching this on YouTube, please like, comment, and subscribe to the channel. If you're on Apple Podcasts, Spotify, or any podcast app, follow the show and leave a rating. It sounds simple, but it shows the algorithm that this content matters, and it directly impacts how many ambitious professionals like you discover these conversations. When you're helping me, you're not just supporting a show. Here's what you're really doing. You're saying that quality business conversations deserve a platform. You're saying substance matters over hype, and you're saying this mission is worth building. So if this resonates with you, help us reach others like you. Subscribe, follow, share, whatever works for wherever you are. You're helping build something substantial from the ground up, and I genuinely appreciate it. So thank you. And now back to the show. Dominic Sullivan, welcome to Business Unbound.
Thanks very much for having me, Florian. It's a pleasure to be here and speak with you again.
It is indeed. And Dominic, I'd love to start with your story. Take us back to where this all began. Like, what drew you into the M&A world, and how did your career unfold from there?
Yeah, I guess it was a bit of an interesting one. I grew up in Sydney, Australia. I graduated high school, and upon graduating high school, if you get a very good grade, you get selected for cadetships, accounting cadetships, where essentially top firms hire you straight out of high school as an 18-year-old, actually, to work there full time and study part time in a business degree. So I started at a firm that was in restructuring and turnaround as an 18-year-old, very, very fresh, very naive to the world, I guess. And it was there that I learned more about accounting, about businesses that are struggling, and the processes once they become deemed insolvent or go through a receivership or a voluntary administration. But while I was there, I got a first taste of distressed M&A. And
Mhm.
I really got a taste of that through a couple of projects. And that kind of opened my eyes to the M&A world, let's say. I then decided to move out into or move from the restructuring world into financial due diligence, where I
Mhm.
started at a big four accounting firm in Amsterdam after a couple of years' experience. I was in the financial due diligence space, looking at numbers, looking at businesses very closely through the financial and accounting lens for a number of private equity clients and strategic corporate clients. Uh, Enjoyed that. Decided to move into more of the then carve outs and integration work. So
Mhm.
before a company would acquire another company, looking at the synergies that can be made, or before a company decides to carve out a business unit, look at the benefits of that. I enjoyed that project-based work, and then kind of wanted to move away from the advisory piece and actually become someone that would make decisions. So I got a great
Mhm.
opportunity at Vinted, which is the one of the probably best performing scale ups now out of Europe, where I was in the
What is
M&A team
Winted?
there. Oh, Vinted. It's the largest uh, consumer to consumer to consumer marketplace for secondhand fashion. So
Ah.
if you, yeah, so they're probably, I'm not sure what their valuation is now, although they're one of the best unicorns out of Europe at the moment. So
Mhm.
they had an M&A team. I had fantastic exposure there. Um, we acquired a couple of companies, but I guess there was a point where, long term, I want to be a high school teacher, actually. And I got a lot more satisfaction working closer with clients who were a bit smaller. And I found that the most enjoyable element that I had when working with clients was explaining to them the process of M&A and what to look out for. And I always got really good feedback when working with people that I explained things really nicely and made them feel in control of the process. And I noticed a huge opportunity with Flippa where there was a real lack of representation of these founders of online businesses when exiting. So yeah, 3 years ago, joined there, and I've had some incredible exposure, some incredible projects that I've been on where I've helped founders of smaller businesses between, let's say, 100K and
Uh-huh.
10 million valuation to exiting to more sophisticated buyers. And yeah, it's been an absolute pleasure so far.
I do still remember when I learned a couple of years ago about the possibility to buy an online business, and
Yeah,
for me it was mind blowing at the time. It was like, what, you can do that? And
100%.
just for our audience who may not be familiar with this world of online businesses and building online businesses and then selling them online as well, can you
Yeah,
perhaps provide a quick 10,000-foot introduction into the world of online businesses?
of course. I mean, it was also new for me 3 years ago. I was used to the traditional business world, traditional M&A, and then I heard and I spoke with friends who were setting up e-commerce businesses, mobile app businesses, SaaS businesses, earning nice passive income, very impressive
Mm.
passive income. Um, I then looked into it deeper and I saw 40% of Americans have side hustles now. And it's growing, by the way. I think 50% of Gen Zers are having side gigs as well, particularly. And the younger generation is moving away from the 9-to-5 job and looking to diversify their income streams.
Uh-huh.
So as I saw this shift, I thought to myself, all right, well, people are building these online businesses, which are, there are some that aren't good. There are some that are good. And these are sustainable, they're scalable, they're transferable, right? All of these elements are very important when selling a business. So there's a market for that. There's a market for building such a business and then deciding to sell that business to a buyer. So yeah, that's basically the opportunity that I saw. And for those people that don't know a lot about online businesses, let me tell you that it's a great way to diversify your income and have more autonomy over your situation.
Hmm. And we talk about this in a moment. Before we dive
Sure.
deeper, just for context and for feeling of scale, you're currently affiliated with Flippa, which is one of
Sure.
these marketplaces that you mentioned, one of the bigger ones, I would tend to say.
Of course.
Can you
Yeah.
give us a feeling about the amount of transactions that get facilitated through the platform?
Yeah. I mean, Flippa does around 15,000 transactions a year. We are the number one marketplace in terms of deal
Mhm.
volume. Now we have deals of $10,000 right up to 50 million. So we are a platform where people can list their business to sell their online business. And we have categories. We have a number of categories: e-commerce, SaaS, mobile apps, digital agencies, YouTube
Mhm.
channels, even podcasts, by
Mhm.
the way. It's a real newsletters. It's really growing. But there are, of course, this is not just about Flippa. There are other marketplaces as well, acquire.com, Empire Flippers. There's a number of other marketplaces out there and ecosystems out there where that are facilitating this trend. Although Flippa is the number one in terms of deal
Mhm.
volume. Yeah.
Well, and you've basically you spent years in high finance, and now
Yeah.
you're in the online business M&A world. From your perspective, like, what are the biggest differences that stand out to you if you compare these two very separate environments?
I mean, how long do we have? I mean, this might have to turn into 3 or 4 episodes. It's been such a journey. I mean, I think, okay, the big differences that I see, and as an accountant, right, as someone who grew up,
Mhm.
with financial due diligence as their core skill, let's say, I do notice the difference in attitude of traditional businesses, the big
Mhm.
corporates, towards their financial hygiene, towards the organization of their numbers versus an entrepreneur, an online entrepreneur. And I also understand that if you're an entrepreneur, you're a risk taker, you move fast, you fail fast, you're your own boss, you're the king or queen, right? You have your way of making money. You're a hustler, okay? Whereas in the corporate world, you have structure, you have hierarchy, you're trained to think a certain way, and within these parameters. And so the organization of as I said, a traditional business is a
Mhm.
lot more structured than the online business, and that can often be very challenging when you decide to eventually sell for a buyer to acquire you if you don't have that structure. Even though, ironically, it's the lack of structure that gets you there. If you're a risk taker, you often have strengths in taking risk and sometimes ignoring, the necessary, boring tasks that you need to do of having your data in order, your monthly P&Ls, your monthly
Mhm.
balance sheets, etc. So that's probably the biggest difference I've seen. Specifically, I think as well in M&A per se, um, the emotion is a lot different as well. When I'm dealing with in previous projects at previous companies, you're dealing with a CFO, you're dealing with a business controller. Of course they care, of course they're committed to their work, but the
Right.
emotion is less, let's be honest. Whereas when you're dealing with a founder, they've built this baby, they've bootstrapped this business. It's their life, and there's a lot more emotion that rides with that. And that's something I love. I absolutely love that. It's a lot around psychology as well. It's a lot around being there as emotional support during that roller coaster. So for me, it's more fulfilling to be in this space.
Hmm. That's really interesting. And you already hinted towards it. Like buying online businesses in particular can be exciting, right? From both
Mhm.
perspectives, being the seller, but also being the buyer of an online business. And
Sure.
you work with professionals who are exploring online business acquisitions as a path to potential, well, financial independence. It's a loaded terminology, of course,
Mm.
but before we speak about the actual mechanics, I'm curious, like, what do you think is driving this trend and why has it become such a compelling option for people right now?
It's such a good question. I think the trigger or the catalyst was COVID. Um, I
COVID.
think, yeah. By the way, this is just my opinion. So,
Hmm.
I think with COVID, it changed the way people think about work, changed the way people think about life. Actually,
Mm.
no longer do you have to go to work; you can work remotely. Um, a lot of people missed that office camaraderie that they used to have, and I think people realized that hey, I can work from home and earn passive income and still have my life with my family or my hobbies, and I can have autonomy. I think COVID or that period of time made people have a taste of autonomy and a taste of time to have to themselves and to be in charge of that time. And business ownership is a great way to be no longer do people want to sell their time for a fixed salary, and then maybe a discretionary bonus at the end of year. People want to sell their ideas and use other people to work for them and basically maximize capital and build their own businesses. And I think COVID really triggered that. Um, so yeah, that's my thought on that.
Hmm. Let's try to make this very, very concrete. Okay. So assume
Sure.
you're a professional, a working professional, you're sitting maybe on a little bit of capital. Assume like in the range 100 to 500K, which may come from inheritance or just savings or, just saving the discretionary bonus that you just mentioned.
Hmm.
And assume that they wanted to become business owners in the online space. What does a realistic strategy look like for building a portfolio of these online businesses that generate meaningful income, at least meaningful enough to keep a family afloat?
Yeah, great. And let's be concrete. So if I'm not being concrete, then just say, Don,
Mhm,
please make it
mhm,
more concrete, please, because I really want to make sure our listeners can get a lot out of this. So, okay, there's two ways to own a business, in my view. The first way is to build it from scratch. The second way is to buy one, right? So let's look at building from scratch. Firstly, you've got to test the idea. You've got to spend time on it. You've got to set up the infrastructure. You've got to find suppliers. You've got to get a market fit. It's an unproven model, right? There's higher uncertainty. There may be greater upside, but at the end of the day, do you really know that it's going to work? Okay. What's the second path to business ownership? It's acquiring. It's buying something that's already generating positive cash flows, profit, okay? Not just revenue, not loss making, but profit. It's something that's already proven. You have an existing customer base, you have an existing supplier, or you have already an existing team working for you. And so what's happening at the moment is a lot of, I work for a number of small private equity family offices, right?
mhm,
Also just wealthy people who have built a capital base. They have asset allocation, okay, real estate, stocks. Now it's also buying businesses, buying a laundromat, for example. People probably see that, buying a car wash cafe. Well,
mhm,
also there's an asset class there of online businesses. And these online businesses are um, trading or selling for very achievable and realistic multiples between, let's say, 2 times profit and 3 times profit. We can talk about that more in detail later. But yeah, to be tangible, so if someone has 100 to 150K capital, for example, there are people that are on platforms like Flippa where you're looking for businesses that are for sale that may be doing $35,000 in profit a year or $50,000 profit a year that are selling for 100,000, okay, or selling for 150,000, or selling for 200,000, okay. And a lot of people are looking at those businesses, finding what they enjoy, finding what they have a niche in, finding what they have an interest in, and then structuring deals accordingly. And we can talk about how what deal structures I'm seeing, maybe later on, or for sure later on. But that's people now are shifting towards not setting up a business, not wasting time, not taking a risk, and buying something that already has positive cash flows, and you have that repeatability of income and a proven model that works with existing customers and an existing client base.
And when you think about the different types of online businesses or the business models, what are the ones that generate the most reliable like cash flow or the most reliable income? Is it like SaaS? Is it e-commerce? Is it still content sites in 2026, or is it marketplaces?
So I think that's a fantastic question, $100 million question, let's call it. Look, it depends on so many factors. So let's get into them. I think firstly, work backwards as a buyer. You're a buyer, you have skills, you have goals, you have a limited amount of time. So first define what your skills are, define what interests you. That's so important. I get people ask me this all the time, right? I've moved to Dubai 6 weeks ago, and I'm getting this question asked a lot in my initial meetings. Dom, what type of business should I buy? I think you first have to look within yourself and say, hey, what are my skills? What am I interested in? That's the first question. Once you've defined that, then let's look at the different types of businesses. If you're someone that is interested in physical products and is very entrepreneurial in terms of, I think I know that product, I think that's a good market for it, more operational and less tech, then e-commerce is the way, okay? In order to be strong in e-commerce, you need a number of skills, right? But I think the biggest skill in e-commerce is having the ability to create a brand. And because a brand creates defensibility. Once you have defensibility, you can differentiate yourself from other e-commerce brands. That then brings recurring revenue, recurring clients, right? Which means that you have to spend less money on marketing, which ultimately makes you more profitable. The biggest threat to a profitable e-commerce business is your marketing spend, is your cost of acquisition, okay? So it's very hard to have a profitable e-commerce business if you don't have a recurring customer base or a good product, because often you spend so much money on acquiring that first customer or that customer, and if you can't retain them, it's very hard to then continue in a sustainable manner.
What are out of curiosity, what are the typical margins in e-commerce that you're seeing?
Yeah, so typical and it depends if you're Amazon or if you're D2C, right? So if you're an Amazon business, the margins are typically a little bit lower. And if you're an Amazon business, it just means that you're selling through that channel. So you have a product and you're completely dependent on selling on Amazon. If you're D2C, direct to consumer, you're usually selling through Shopify, right? And the margins are typically a bit better, right? So I think e-commerce business doing around 20 to 30% EBITDA margin is quite strong.
That's in a
Amazon
D2C
is a little
space.
in the D2C space. If you're doing, Amazon is usually a bit slimmer, the margins. So you're probably looking at around 10 to 20%, I would say. So that's usually the profit margins that you're looking at.
And how do you think about content sites? I mean, there was, especially pre-AI, there was this business model where you would set up a blog, and I think many people know this, that there were professional bloggers out there who were creating written articles, and then they get an income through putting ads on there or selling own products on top of it. Now, after ChatGPT and other LLM models came about, from your perspective, how is this blogging business model potentially changing?
Yeah, look, maybe I annoy some people, but I do think blogging is no longer what it used to be, because you're completely dependent on the Google algorithm, right? So if you look at blogging over the years, there's always a change to, or Google always changes something, and then what happens? You lose your traffic, and then you've got to think of another way to then re-engineer more traffic, and so on and so forth. And simply, it's just not reliable. I think the after many years in this M&A game, the best buyers, and I follow the buyers, right? So I follow the buyers, because the good buyers, because I know if I have good buyers, I'll attract good founders. And if I attract good founders, they're going to get good offers, right? So whenever I have a call with a decent buyer over the years, they always ask me three questions usually. Dom, is it scalable? Is it sustainable? Is it transferable? SST. So sustainable, scalable, and transferable. And I know that so whenever I'm talking with a founder, that's kind of how I'm leading the conversation. I'm ticking in my mind already, okay, is this sustainable? Is it profitable, right? Is it scalable? Is it something that a buyer can 10 times this, 100 times this? Is it transferable? Is the business completely dependent on the founder, or do they have operations in place? Okay. So to get back to your original question about content businesses, well, it's very dependent on traffic. It's very dependent on algorithms. It's very dependent on YouTube. If Google won on YouTube, for example, if YouTube can just easily turn off your channel if they want to, right? They can change the business model. They can change the fee structure. Amazon's the same, by the way. That's what actually led to the aggregators going bankrupt. Like, it was all of a sudden just an increase in fees that really made them less profitable and less attractive. So if you're completely dependent on one source of traffic or one source of revenue and one platform or one channel, you're susceptible to not having that independence that you need, and therefore it's not really that sustainable.
Right. That makes a lot of sense, and I think we are starting to unpack it a little bit. It sounds superficially, it sounds very straightforward, right? Coming from our original line of argumentation, you have a little bit of capital, you buy a profitable business, you have your money back in, say, 3 or 4 years. But there are obviously risks involved. So if you're a buyer, what are the milestones that you should be hitting along the way on your path to acquiring an online business? What are the key steps that they should follow?
Sure. Okay. That's a great question. So maybe I talk about the steps in terms of an M&A process, right? And how it works. So as a buyer, you're first going to source deals. So you're first going to actually define your criteria. So the first question you need to ask yourself as a buyer, what are my strengths? What am I interested in? What type of business model is attractive to me? You define those key metrics, and then you know your parameters. Then you go on to marketplaces. Flippa is a great example. Acquire, Empire Flippers. And then you start searching for businesses that may align with you. Okay. You then shortlist those that may fit your interests. So think of things like, okay, and let's just use e-commerce for the time being. We can move to SaaS and others later. But e-commerce, okay, what niches do I like within e-commerce? You have to pick a niche. You can't be a general e-commerce business. Think of a niche. Now, good niches that buyers are always asking me about are pets. Okay, the pet niche, hobbies and games for children, supplements, skincare products which are repeatable in their purchases. So you have an existing customer base that you can always know that they will probably acquire again from you or buy from you on a subscription model. Okay, so once you've defined that niche, you define the amount of profit that you're looking for per year. You know that you have 100,000 in capital, for example. So you know then that if businesses are selling for between 2 times and 3 times profit, let's start at businesses that do between 30,000 and 50,000 in profit. And you can do all of this on Flippa. on all the advanced searches, just like how if you go on Airbnb or booking.com, you can search, okay, I want a room between, 300 euros a night, 500 euros a night. It's the same. On Flippa, I want a business between 30,000 per year and 50,000 per year profit per year. Then you have the shortlist. Then you find a couple of businesses. Then you inquire about those businesses, and then you start asking the founder questions. So what are those questions? Well, it's really important. And again, accounting background, the first thing I ever want to see when I'm looking to buy a business is the monthly profit and loss. It's the first thing. It's the language of the business, in my point of view. It will tell you what type of revenue, what are the products that they're selling, and what sales are being made per product or revenue stream. Then you want to see what the cost of goods sold are. Are they a high percentage of the revenue? So therefore, do you have good supplier terms, or is it a good business to be in based on the gross profit margin, or shipping costs, for example? Then you want to look at the operating expenses, so the marketing costs, the salaries, the hosting fees, all these different operating costs, and then you have the operating profit. Once you have that foundation, that usually is your map of how the business runs. Again, this is from someone with an accounting background, because it really is the language of a business in my point of view. I have bias maybe. And if you disagree, please put it in the comments, of course. I'm curious to hear the feedback. But I mean, once you have that, then you can then ask about the operations of the business. So once you see the P&L, you kind of answer the first question. Is it sustainable? Is it profitable? Then you want to learn about the operations of the business. Because once you learn about the operations of the business and the market, you can then decide, okay, is this scalable? If you know that there are, 3 workers working as a virtual assistant, or, the supplier can increase their supply over time, and there's a strong market for it. If the trend of the business is going up, you know that you can scale it. You can then also find out what are the daily, you also want to understand what are the daily operations of each of those workers. And more importantly, what are the daily operations of the owner? Because remember, you're buying this business to own, not necessarily operate. You want someone doing that for you. So you really want to ask the direct questions. In your case, for example, if you're selling a business, what exactly is it that you're doing day to day, Florian? And then you can think, okay, can I do this or not? Do I want to do this or not? Or can I outsource it to someone else? Then you know if it's transferable or not. So they're the types of questions. Once you have that understanding of the business, you can then decide, okay, do I want to go ahead and do I want to make an indicative offer, right? An LOI offer, letter of intent. And that's where you decide to a heads of terms and deal structure. Now, it's really important that always remember, just because the asking price of a business is 150,000 doesn't mean that the seller will accept something less than 150,000. So always give some place to negotiate, some areas to negotiate. And remember, there's different deal structures that you can put in place. So it's really important that if you identify some red flags in the business, of course you should note that in the valuation, but you should also structure the deal in a way where you make sure that the founder will work with you moving forward. So for example, a common deal structure that is seen is seller financing. So you put down 60% upfront. So let's use simple number. 100,000 is the offer. I put down 60,000 of my capital upfront, and then 40,000 will be paid over 1 year or a year and a half in monthly installments. And that will be paid by having that structure. It will ensure that the founder will give you a good handover, be available for calls when something's down or you're having issues with the supplier. That's really important. Another structure is an earnout. So maybe you want more skin in the game from the owner, and you say from the founder, and you say, hey, look, I'm happy to pay you more than 100,000 if we hit XYZ targets. But if we don't hit those targets, it's probably going to equate to less than 100,000. So then you also get the buy-in with the founder as well. So once you agree to that deal structure through an LOI, a letter of intent, You then begin the due diligence, and that's where the hairy work comes in, the detailed work comes in. That's where you decide whether or not if you're going to get married and, are you going to go into a binding agreement, a binding purchase agreement. So you're looking at financial due diligence, you're getting access to the bank statements, the
Uh-huh.
Stripe account, the tax returns, and you're making sure you're matching that profit and loss statement that they gave you earlier against
Uh-huh.
these
Uh-huh.
numbers to really see if they're telling you the truth. Because it doesn't always happen. It's not always malicious, by the way. Founders aren't always, although I have seen it where they are malicious, but sometimes they're disorganized.
Right.
It's
It,
not it's not T-Mobile that we're acquiring. It's a small e-commerce or SaaS business where the person doesn't always have a background in accounting and doesn't have these strong business operational systems in place. So sometimes things fall through the crack, and it's your opportunity to find um, those areas to discount the deal. Also throughout due diligence, you do further operational due diligence. You want to verify exactly who the suppliers are. You want to verify what their capacity is. You want to
Mhm.
verify if there's any exclusivity. You also want to verify the staff that are working for the founder, what their appetite is for a new buyer as well. There's a number of opportunities in that time of due diligence that you want to verify before you
Mhm.
decide to go to a binding APA, asset purchase agreement, or SPA, share purchase agreement. Because
Mhm.
once you sign that purchase agreement, then you're in a binding offer, the deal will close, and then the business is yours, subject to the terms of the agreement. So it is hard to answer in one question, but hopefully that gives a good enough overview. But if there are more questions from this, please tell me.
No, it is a very, very good roadmap. And obviously, you and I know each other because you
Yeah.
helped me through the process myself. And I mean, this is exactly how it went for me from a seller's perspective, right? This is exactly the way that we went together. Now,
Yep.
we are on the buying side, and you made an interesting distinction earlier. You said you're coming in and you have to assume operations, you have to keep the business running. So if you think about this from the perspective, okay, maybe you're like a professional with a little bit of capital and you want to buy an existing online business from an investment perspective, what you've explained doesn't sound terribly passive. It sounds rather active to come on and take on this business. So how do you think about like the investor hat buying cash flowing assets versus
Mhm.
an operator hat?
Yeah. Yeah. Okay. So I think that's what if we went back to the process of buying a business before the previous question, in your preliminary due diligence so so before you make the offer, right? You have an opportunity to ask a lot of questions. And I
Mhm.
think that's why it's really important that you really get to understand the nuts and bolts of the operations of the business. Who's doing what, who's employed, you as the founder, what are you doing day to day? I want to know, Florian, I want you to tell me what your week is Monday to Friday for this
Mhm.
business. And then you put yourself in their shoes and you think, okay, do I want to do this? Do I have the time to do this? So if the answer is the founder's spending too much time on this business, it's too intensive, you can think, okay, this business is not for me. I'm going to find another one. Or
Mhm.
you can think, okay, can I put someone in? And can I find a business operator that I can do? And if I put a business operator in, that's going to cost something. And if I adjust these costs to the original profit and loss, does that make sense? Does it make sense for me to buy this business knowing that I'm going to hire someone to do that for me? The best businesses, though, the most attractive businesses are where they have this standalone operation in place already. But usually they're a bit more expensive. So you're going to pay a bit more of a premium multiple. But there's plenty of, let's say, diamonds in the rough. If you're a good operator,
Mhm.
if you know good operators, and that's what a lot of people that I'm very close with are doing, they're finding these diamonds in the rough. They have the operator network. They know they can plug, this person into that role, another person into that role, and, turn a business from doing 30 or 50K a year in profit to 200,000 profit quite simply in a year.
Mhm. Mhm.
Um, and not only that, they're buying it at a cheaper multiple as well because it doesn't have those operations in place. So if you're an investor with a buyer hat on and you want passive income, no stress, then find those businesses with those standalone operations that have been running smoothly for 2 or 3 years. Okay. And if you're someone that is a bit more hands-on, that thinks that they can actually put in good systems in place, then yeah, it's good to maybe find those owner-operated businesses out there that aren't dependent on the founder, that are transferable, where you can replace them with good operators in your network. And again, we're in 2025, nearly 2026. So I'm telling you now, there is no better year or no better time in the world of all the history of human beings to have accessibility to people and talent.
True. Yes. I would agree with this
Mm.
100%. And I saw it for myself that the online business that I founded previously, it was an
Yes.
international team that helped me do it. I couldn't have done it like in addition to my full-time job, talking about like side hustles earlier, right?
Mm.
And it was so accessible. You have platforms, Fiverr, you have Upwork, you have other like all sorts of freelance platforms and some underground sort of like networks, underground like onlinejobs.ph. That's remarkable what you can achieve if you go out there and if you're looking for talent.
100%. 100%. And it's a shame if people aren't leveraging those tools or these networks.
Now, from a buyer's perspective, what are the biggest mistakes that you actually see first-time buyers make when they are trying to build income through acquisitions?
Oh, that's a good question. I think that's why, okay, my answer is buying businesses for, mm, it's something I've been thinking about a lot actually, because I would say that a lot of the acquisitions that I'm a part of are successful, right? But there are some that aren't. And I always wonder why, what was sometimes I sense it early on as well in the transaction. I'm like, I'm not sure if this is a fit. And I think often it comes down to, does the buyer have true interest in the business or not? Really?
Hmm.
Um, of course, it needs to make sense from a financial point of view. We're not here for charity, right? If you want to be in charity, then that's fantastic to be in, but then go work in charity. But obviously, people are here to make money. So I think you need to have an understanding of the business, and you need to work to your strengths and your interests. Because otherwise, I've seen people acquire SaaS businesses with no
Hmm.
understanding of tech. And yeah, of course you can hire a developer. Of course you can hire a CTO, but you need to know the language if you're going to have proper conversations with hiring someone. So I think that kind of goes without saying. Maybe it's obvious, but it's actually not so common to people. Common sense
Hmm.
isn't always so common, right? I think another red flag of businesses when that are for sale before buyers buy them is the age of the business. Okay, I think you really need to look at the age of the business. How long has it been in place for? Because that creates defensibility. Okay, it creates sustainability, particularly because you have an existing client base that is loyal to the brand. The upside and downside, it's a double-edged sword, online businesses, because we talk about accessibility. We talk about how anyone can start a business from anywhere around the world if you have internet and make this passive income, which I've seen time and time again, right? But it's a double-edged sword because anyone can do it. So because anyone can do it, then your defensibility around the business is less. Okay. And it's not like you have a manufacturing plant which has been around for 20 years or 30 years in the family with existing customer bases, and you've got strong capital, strong equipment, infrastructure built in place that's very defensible. Well, no, these businesses are a Shopify website with a product that is supplied to probably somewhere from China or another country, which can be supplied to anywhere. You
Hmm.
need a bit more defensibility around that. You need the brand, you need age, you need strong Google reviews, you need trust. So I think that's something important to keep in mind, actually. When you're acquiring a business, do you have that age? Do you have that brand? Do you have that trust?
Would you say that the Lindy effect is applicable in online businesses?
Could you explain that to me? Sorry, I probably should know that, but I don't know it.
Um, I don't know to what extent this is an established concept. I've heard about the Lindy effect from another podcast guest before, right? And he explained, okay, there's this Lindy effect, and it basically is this concept that says the longer something has existed in the past, the more applicable it continues to be going forward. And I think maybe you know 𝐘𝐨𝐮'𝐿. She's very, very vocal in the buying businesses space, more like physical as compared to online from what I believe. And I do have a book somewhere behind me in my bookshelf. And I think she also touches on this Lindy effect, like rolling over historic success and historic sustainability into the future. Would you say this applies in online businesses?
Yeah, I think that's a fair assumption to make, for sure. I mean, if I had a choice, but again, I think it depends on, again, we're having our buyer's hat on, so we're a bit more conservative as an investor, then yes, I would say for sure that the Lindy effect is more relevant if you're an acquirer, for sure. But if you're acquiring something to scale big time, I'm not sure if that effect if the Lindy effect is relevant, because you probably want a new product in a new market. So you want to see the upside there. But if we're, conservative and we want positive cash flow businesses at reasonable multiples, then yeah, I think the Lindy effect makes sense.
And I'm actually curious if you can tell us, I mean, if you can say, if you can fill us into like a real world case study, like coming back from our example, have you seen someone coming from the professional world continuing to have his or her like main job, successfully buying and scaling online businesses on the side? Do you have a case study, like a real life example that you can share?
100%. And you should interview him. He'd be a fantastic guest. He is from Dubai, actually. I've known him for a couple of years. His name is Bavar from the Netherlands, but has moved here. He started, his story is, and I won't go into too much detail, but he started a marketing agency for e-commerce businesses. He figured out the playbook, as you would if you're an expert in marketing, and you're selling those services, then you better be good at it, right? And he thought, you know what? Why don't I do this myself? And he's absolutely killing it. Where he has now shifted away from. He's still doing the marketing agency sort of, but it's running standalone, and he's acquiring these e-commerce businesses. Then have systems in place to scale them, and then exiting them or holding onto them. And then what's fantastic is that he's actually now into owning other businesses, offline businesses as well, to diversify. So he's kind of gone from having a service, being an expert in that, then using that same playbook to start e-commerce brands, but then building cash flow from that, acquiring more e-commerce brands, and then building more cash flow from that, selling some of those, using that capital to buy offline businesses. It's a fantastic story. I'm going to put you in touch with him, and I'm sure he'd be willing. He'd be a great guest. But does that answer your question a little bit as a case study? Maybe I can. Would you like another one?
Yeah,
go into more detail.
Does. And what you explained really sounds like a nice flywheel effect that sets in eventually. Like if you're persistent and you keep the momentum and you keep going, it requires work and effort. That's clear. It doesn't come granted, or does it just magically fall from the sky? You got to do something for it. The type of case study I was looking for was maybe more if you're a working professional, like me, for example. Take me as an example. I have a full-time job. I want to keep my full-time job because I genuinely enjoy what I'm doing. It's exciting for me. Have you had people like me who successfully
100%.
bought and operated online businesses just on the side?
100%. Yeah. Yes, I can give countless examples. The one that comes to mind initially was, and I'm just going in order of people that I've met the last, over the years, but the last guy I met 2 weeks ago, met him for coffee here. He was a sales SDR, so sales development representative at a tech company in Dublin. And I always love to know, with the founders I work with, I always love to know their stories. For me, it's the one of the most interesting parts of my job, because I also find it inspiring. And he's like, yeah, like I saw my friends running these e-commerce businesses, and I thought to myself, you know what, I can do that as well. It's not rocket science. And he's a smart guy. We're all smart, right? We're all gifted in our own strengths. He was kind of sick of working for this, salary and exchanging time for money. And he's like, you know what, I can build something. So he bought one business, and then he realized it was like kind of his education. So rather than spending X thousands on a degree, he thought, you know what, I'm going to spend X thousands on a business. And he scaled it, and I think he paid between like 30 and 50K for it or something. And then he was earning income from it. He was trialing and failing with like different products and like different ad campaigns. And then now he scaled it to 6 figures a month in revenue. Now, of course, profit, it's not 6 figures, but still. And now he's at the point where he's quit his job, and he knows the formula, and he's acquiring other businesses. Another example that I have is their boyfriend and girlfriend. The boyfriend already had experience in e-commerce, to be fair. The girlfriend had a job, and she was also over it. And she was like, the boyfriend was like, you have such a good mind in fashion, and it was more wellness actually. Use it, like think of something, and let's do it together. And now her business, it's in waxing, hair wax removal.
Yeah,
she's making more money than him with his business, just through having a good product, knowing how to do marketing, influencer marketing, knowing the right market in the female industry for this. So I mean, I meet people every day. I have a little book, a little diary actually, where every interesting person I meet, which is most days by the way, I write down their name and like what they've done, because I use that as energy for my life.
And Dominic, let's actually switch perspectives. We've been talking a lot about the buying side of things. Now let's talk about the selling side of things. And I understand that you also advise sellers, like you have done with me in the past, on the exit process, how to think about the exit, and what should a founder be doing, let's say a year or even 18 months before they plan to sell their business to, set themselves up for the best possible outcome?
Yeah, that's a great question. SST, sustainable, scalable, transferable. Yeah.
Same framework.
Yeah, it really is. Like, I think you have to work backwards. If you know you want to exit, well, think of what a buyer is going to want. So every business decision you make moving forward, ask yourself, before I do this, is it sustainable? Is it scalable? Is it transferable? Think of the buyers already. And I always encourage people to speak with people like myself, right? Or other advisors out there. And it doesn't have to be time consuming. It can be literally like, hey, I'm thinking to sell in 12 months. What should I do? What should I not do? What are some buyers that I can already think of? And those discussions that I have often trigger them more, actually. They actually know the buyers. Of course, I have a lot of buyer relationships, but the founders also know the buyers themselves as well. They can already think of the buyers that may buy their business. So I think sticking to that framework of SST, and every decision you make, think about that and thinking backwards from what a buyer would want before making the decision. So, I mean, let's be concrete, of course. I think already thinking about when I sell my business, am I replaceable? Because that's transferable. Okay. So do I have a good operator in place already? And is it a strong operator paying a economical salary that makes sense for the business so it can be sustainable? Okay. So it can be profitable. Am I diversifying my customer base? Am I reliant on 3 or 4 clients? If I have an agency, am I reliant on 3 or 4 clients, or do I have a diversified client base? Am I reliant on suppliers? Do suppliers have leverage over me? What else do I think about when I'm advising people before they exit? There's the obvious one that always triggers me, but do I have good financial hygiene?
Right.
Do I have good P&L? Am I spending, whatever it is, $500 a month on a good bookkeeper or more, right? Just do it. Please do it. It will save so much time in the process. It will gain trust with the buyer. If you come to a buyer with poor financial hygiene, there's 1,000 other businesses for them to look at. So please make sure you have, strong financials and clear monthly profit and loss. They're the things that come to mind.
And assume that these things are in place. You have the SST framework neatly adopted. You have like the hygiene elements, financial hygiene, business performance hygiene, maybe even organizational hygiene. You have an operator that's pretty much running the show. And I would say these are then the elements which make this, company very attractive in the sale process. Now, how do you on the sale side on the sales side, how do you actually run the process? Like, do you create buyer competition? Do you speak to a few selected buyers? What are you doing to help sellers like generate the value that they potentially deserve?
Yeah, so it all depends again on I'm very like, if I work for the buyer side or the sell side. If I work, as I explained with the buyer side, if I work for the buyer, because I work privately for buyers, right, as well, I always ask them, what are your strengths? What do you want? Like, let's define clearly what your criteria is. It's the same thing with a founder. What type of exit do you want? Why are you exiting? Are you exiting because you just want to be done with the business and not think about it again? Or are you exiting because you built it from 0 to 10 and now you wanted someone to build it from 10 to 100 and you want a bit of upside? These types of questions help in the narrative that we will deliver to potential buyers, right? And it will also dictate to me what type of buyers I'm going to take this to, right?
Right.
I know buyers that will, sorry, one step back as well. Do you want a straightforward process where you can get it done in 4 to 6 weeks? Of course, it's never guaranteed, but my point is, I know buyers that will get deals done in 4 to 6 weeks. Now, will it be the best valuation? No, it won't. But there are founders out there that have multiple businesses that are like, Dom, please just get this off my hands. I want to focus on these other portfolio companies that are on.
Right.
Okay, no problem. There are other founders out there that have built their baby and they're like, I want to see this grow. I want, I won't talk too personally about your exit, Florian, but the buyer that we got there was very professional, looking to expand it, like professional private equity, looking to expand it. Like, that was a certain type of buyer, right? Very professional to deal with. So it really depends on what the founder's looking for. Now, in terms of, the go-to-market strategy, again, it depends on what route or path we want to go down to, but I always like to have rolling deadlines. Okay. So, giving urgency to the buyers, saying, hey, this is the timeline. 4 weeks, we're going to expect an indicative offer. 6 weeks, we expect a formal LOI. And once you give buyers that deadline, then they have to work towards something. Otherwise, the process will just go on. I'm big on relationships, big on trust. I don't like fabricating demand, or I'm not also an open book. Obviously, if there's no one interested, I'm not going to tell the buyer that. But I'm also not going to say, we've got 5 to 7 people that are potentially going to make an offer. That it just doesn't work. M&A is built on trust, and it is built on relationships, and that's when the best deals happen for both buyer and seller.
That makes a lot of sense, actually, and I tend to agree to say that from my own experience, right? And I'm wondering a little bit. Okay, you're a seller, you're in this process, you have a professional sell-side advisor who's very experienced in the space, like you are, and still people make mistakes. What are the most common mistakes that you see sellers make that potentially leads to money being left on the table, or maybe even on the emotional side of things?
Good question. I think sellers sometimes, I tell them not to do this, so they don't do it. But sometimes founders, just because they think they're selling the business, they're like, oh, okay, I'm not going to put the same amount of effort in. So it's no longer performing in the same way that it's used to. So just always run the business. Just because you're going through a sale process, still run the business as if you were going to run it normally. Because sometimes sellers think, oh, well, I'm not going to spend the same amount on marketing anymore because I'm going to sell it in 3 months anyway. Why would I, or sometimes sellers say, oh, Dom, let's decrease the price of subscriptions to increase our number of customers, or try and increase our MRR. Well, buyers aren't silly. Like, they can see that when they do the due diligence, right? A deal killer as well, which really irritates me, and often people do it before they talk to me, is that they do lifetime value deals in SaaS. So they say lifetime value subscription for $3,000 or $10,000 or whatever. Well, that's not valuable to a buyer. It will increase your cash, right? It might increase the profit that you'll get in the short term, but in the long term, that's not going to be recurring revenue, right? And that's a liability that the buyer is going to have to take on. So there are a couple of the things, and it's just unattractive for a buyer.
That makes sense. And I guess tied to this discussion is then also the deal structuring process for both the buyer and the seller, where you're trying, okay, maybe you have some inherent risks in the business that you want to mitigate through the deal structure. And we talked about this before. You mentioned seller financing, you mentioned earnouts. From a seller's perspective, can you talk a little bit more about structural considerations?
100%. Love this question. Sellers often think that the buyer is DDing them, but I like to, when I have the sell side hat on, I like to DD the buyer. I love it when a buyer, expects a seller to agree on an earnout or equity in my company. Oh, I've got a great offer for you, 50% upfront, 50% equity rollover into my company. Well, who are you and what's your company? And what do we know about your cash flows? What do we know about what you're building, right? I'm going to trust. It's a marriage, right? I'm about to trust in you. So the sellers need to DD. I love DDing the buyers as much as the buyer DDs the seller. What does that mean?
Right.
That means, okay, maybe not in the beginning of DD, but certainly as DD progresses, right? And you've built that trust. Hey, buyer, you have a couple of portfolio companies. I'd love to meet one or two of your CEOs of your portfolio companies. I'd love to have a conversation with them. Are you comfortable with that? You ask it politely, respectfully. Typically, they'll be okay with it. If they're not okay with it, I mean, that might mean something.
It's a red flag.
It is a little bit, and they should be okay with it. They should be proud of it, actually. I work for some really good buyers, and I love being able to put those founders, those stories on a podium to say, hey, this could be you, right? And back yourself and show. So I think that's really important for sellers, particularly with deal structures, especially if you're going to get 60 or 70% upfront. And we need to be realistic. For these asset classes, it is very, very rare to get 100% upfront. Okay, it's very, very rare. If you are getting 100% upfront, it usually means the value or the multiple is a bit lower. So what's standard in the market is, I would say, 60 to 80% upfront, and then an amount that's carried over, right? Whether it be seller financing, earnout, equity, rollover, etc. So that is a big portion of money that is still there to take. So you better do your due diligence as well on them.
Yeah, absolutely. That makes a lot of sense. And I mean, if I compare to the world of high finance, M&A, private equity, leveraged buyouts, you
Sure.
oftentimes have an element of debt in these transactions, plus
Yeah.
possibly in addition to an earnout or even seller financing, although at a much smaller scale.
Hmm.
To what extent do financing providers exist in the space that assist buyers to make a successful acquisition?
Oh, okay. If anyone is listening to this and they are in financing of online businesses, please contact me at @DominicSullivan.io because I would love to speak with you. Financing is so difficult. I get it. I mean, as you know, early on, at the start of my career, I was in restructuring and turnaround, right? So I understand secured loans and banks and how important it is to have security over businesses. But unfortunately, that on the online business world, you just don't have that. So naturally, it makes it hard for a bank to lend. Um, these businesses aren't bankable yet, and I'm praying that that will shift over time as this becomes a more mainstream asset class. But it's very hard. It's very hard. So, because you have that, because there's a lack of financing for these deals, then buyers at the moment have the leverage. They do.
Mhm. Yeah,
Does
that
that answer
that
your
that
question?
makes
I
sense, I
guess.
guess.
Yeah,
Yeah,
yeah.
it
I
does,
can
and I
elaborate
was
more
wondering.
if you have a follow-up question on it, by the way.
I think it makes perfectly sense for the time being, right? And I
Mm,
think also for our audience members, it means to be very clear and intentional about what you're trying to get out of the space if you're interested in it, and
mm,
what you would need to bring to the table to be part of the game and to play in the online business environment, right?
mm. Oh, 100%. 100%.
Good. Dominic, I'm interested to learn a little bit more about some of your personal reflections. You've now seen hundreds of transactions, I would assume.
Yeah,
You've
sure.
watched buyers build wealth through acquisitions and sellers seeing their exits successfully facilitated. And you've also seen deals go wrong, I assume. And I want to step back a little bit and talk about the bigger picture lessons. Like,
Mm.
what's the most important lesson you've taken from the online business world so far?
Ooh, okay. Well, I have been incredibly inspired by the founders I work for because they have taken risks and
Hmm.
they've failed. And I think in society, we do not embrace failure enough. And I'm seeing countless examples where if you embrace failure,
Uh-huh.
the upside is huge eventually, right? So for me, that's the biggest lesson that I have, and I'm putting that to work as well, right? I'm also taking risks in certain ways, and I'm learning from them. So I think if you're someone that is sitting at home, enjoying your job on a fixed salary, trading your time for a fixed paycheck to make someone else make money, that's fine. And if you're getting satisfaction out of that and having purpose, that's power to you. That is fantastic. It's good to have purpose in life. But if you're someone that is maybe looking to take a risk and try more, like we live in a world, as I said, 2025 going into 2026, where there is no
Uh-huh.
better time in the world to be taking risks. You can still do your 9 to 5 job, and you can still look into. There's so much education out there. There's so many platforms out there. there really is no excuse, I think, to have a go. And I think, going through I went through a very traditional, let's say, what do you call it, journey, you know,
Hmm. Hmm.
studying hard in high school, getting really good grades, then got a really good opportunity when I was 18 to work at this firm, ticked all the boxes, graduated with high marks in university, got good jobs, yada, 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 you know, worked on great projects. But, and think about it, I've worked with so many incredibly smart people as well. But a lot of them never take risks. A lot of them are on that like fixed journey of being in this cycle of working late nights, impressing people, hoping for that strong paycheck, discretionary bonus paycheck, um, getting promoted, getting promoted in 2 years instead of 3 years, or 1 year instead of 2 years. But yeah, of course, I have a respect for that. But me personally, I have more respect for people that take risk, because I think that's really something to be proud of, and not being afraid to fail. Because I've seen some incredible people that haven't taken that journey, didn't go to university, and they're in charge of their time. There actually a good. I don't know if this one I had when was it, last Thursday.
Hmm.
I had a call with a client, and I saw him on the Zoom, and he looked young, and I said, "Do you mind if I ask you how old are you?" And by the way, this business, it's doing 700,000 euros profit a year, e-commerce business.
Wow.
Okay, yeah, not bad, right? And I said, "Do you mind?" I said, "Andrew, what's your age, mate?" Like, it's like, "I'm 19." I said,
Wow.
"Okay." I said, "Man, tell me more about your journey. I'd love to know." He started building e-commerce businesses at 14, right? 14. So, you know, and he's a switched on guy, very professional, level head for a 19-year-old. I mean, if someone, with that age can take risk, so can people that have spent time in a workplace, in a professional environment, with structure, with the ability to close deadlines. Like, you can do it. It's just it's a mindset. It's a mind shift, really.
Have you done it? Have you acquired an online
That's a good
business?
question. Yes, I am doing it. I'm very private about what I'm doing, though, because I like to keep those things separate. But yeah, I have. And to be fair, I've only done it in the last 12 months, actually.
Hmm.
Um, and why was it? It was through being inspired through people that I've met along the way, and backing myself, and and finally agreeing that, if they can do it, why can't I?
How's it going so far?
Yeah, good. Yeah, good. I mean, I'm still, yeah, I mean, for me, the struggle that I guess this is getting personal, but for me, I really like real estate. Okay.
Hmm.
And in order to get bank loans, mortgages, you need to
Hmm.
have, the way the banking world is you need, full-time jobs, salaries, et cetera, et
Yeah.
cetera.
Yeah.
It doesn't really, the banking world still doesn't reward business ownership. Um, so although my cash flow from businesses may be very good, for me, I want to be a high school teacher eventually, and I want to live off the assets that I build up over
Hmm.
time. So that's why my personal opinion, maybe it doesn't go well, but I really like the real estate game. So I'm on a path that hopefully works for me. But yeah, of course, I put my money where my mouth is. So yeah, definitely also have the entrepreneurial spirit as well, inspired by the people that I work with every day.
And did I hear it correctly? Your long-term plan is to become a high school teacher.
Yeah, 100%. Yeah, my mum's a high school teacher,
Wow.
and I had amazing high school teachers growing up. Um, if we talk about what gives people energy, for me, it's it's inspiring, people, like younger people, um, to follow, to just to follow, to achieve their potential. And I was lucky enough to have some incredible high school teachers. The best ones that I had were ones that kind of traveled the world and, had business experience. And I would like to be the same for students if I'm lucky
Mhm.
enough to do it. So I think it's a great gig. I mean, originally I'm from Sydney, Australia. So I do think teaching in Australia is a bit of a different way than teaching in Europe from because I lived in Amsterdam for 7 years, so I have lived in Europe for a long time. I would love to teach in Sydney one day, or Melbourne or something. I think it's really cool.
Now let's start wrapping up our interview. And
Yeah.
I'm wondering, we talked about inspiration. What or who is inspiring you right now? Like, is there a particular entrepreneur or a leader, a
Ooh,
book, or something else that is expanding your thinking?
it's a great question. Hmm. It's so hard. You know the thing, Florian. You've asked me at a time where I'm 6 weeks into Dubai,
Mhm.
um, and I'm in the honeymoon period where you're
Hmm.
meeting people every day. So you're asking me on a high, that's for sure. Um, but let me be specific.
So does this mean that, especially in Dubai, and I think that's a theme that is becoming more and more common or well known, at least, that there's just this amount of inspiration and many aspiring people from all over the world move to Dubai, and it's like a culmination, a melting pot of, well,
Yeah,
ambition.
I think it is. It's the way I'm seeing it. And again, 6 weeks in, I'm conscious that I'm fresh, but I am meeting people from all over the world:
Uh-huh.
UK, Europe, Australia, America, everywhere. Uzbekistan, yeah, Russia,
Mhm.
Lithuania, everywhere, Poland. And they're all people that have moved to take a risk and to build something.
Right.
So I think about it like my granddad, my dad's father. He moves from Mauritius, a small little island near Madagascar, to Sydney to take risk and build a life. And he did
Mhm.
well. Um, he did very well. And I kind of sense the same thing here. Like, people are moving from other places around the world and want to take risk and build something here. And so, yeah, it's so, I've never been surrounded by so many normal people, right? That
Mhm.
are also building stuff and making something and so successful. And of course, you need to get to really, it takes time to really get to know people. But when
Right.
yeah, I was on a networking event. I met a founder that's like researching how to do space mining, you know, like mining
That's
on the
different.
moon. Yeah, yeah. He's
Yeah.
raising money to mine helium-3, from the moon and bring it to Earth for. And now I wasn't good at chemistry at school, wasn't good in science at all, but just like, how inspiring. I met another lady. She's from Russia. She moved to New York 20 years ago.
Uh-huh.
She um, she exited two health tech companies out of the US. Now deploys $3 billion US dollars a year in VC and investments. And that was just casually meeting her. Like, then it goes to the guy that I was talking about, where he had a job in tech as an SDR. Took a risk
Mhm.
through
Mhm.
being inspired from his environment, where he knew other people in e-commerce. Like, you're a product of your environment. So yeah, I think here it's hard to really nail it to one person. I know that's not nice, but I think I'm in an environment now where I'm surrounded by so many everyday people that are doing so well. Um, yeah, I like reading. Like, I really like reading Ryan Holiday. So I like reading a bit about Stoicism, Marcus Aurelius.
Mhm.
Um, so I'm into that. But yeah, in terms of like business entrepreneurs, I don't. Yeah, there's not really anyone that I know. Let's say online. I think someone that's really interesting is Bavar, who I spoke with, who I
Mhm.
spoke about earlier. Like, he's an example of a guy who has just backed himself from step by step by step, normal guy. So firstly, normal guy, humble beginnings, backed himself step by step by step. And now he's just accumulated an incredible life situation through taking risk, backing himself. So yeah, in a way, that's someone who I let's say look up to, and have learnt a lot. Not technically, but just more from an inspiration point of view.
Thank you for being so honest.
Of course, of course. That's what it's
And
about.
Dominic, if listeners remember just one thing from our conversation, one insight, one way of thinking differently, or one action that they should take, what would you want that to be?
Just back yourself and don't be afraid of failure. I think that's back yourself and don't be afraid of failure. It's okay to fail. Every single successful person has failed multiple times. I've worked with millionaires, billionaires. I know their stories. Yes, they fail every single time. And more of a technical thing, SST. Build sustainable, scalable, transferable businesses. And that's going to get you in the best position to eventually exit.
Well, then, Dominic Sullivan, thank you very much for coming on the show and for this conversation.
Thank you. It's been an absolute pleasure. Really enjoyed it.
Before we wrap up, let me highlight what I believe are the key masterclass level insights from this conversation with Dominic. What strikes me most about Dominic's approach to online business M&A is that he's flipped the entire narrative. Instead of treating business acquisitions as this intimidating, high finance exercise reserved for private equity firms and billionaires, he's made it accessible. He's democratized it, and the data backs that up. 15,000 transactions a year on Flippa alone. Real people buying and selling real businesses at 2 to 3 times profit multiples. The second thing that really resonated with me was his framework, SST, Sustainable, Scalable, Transferable. That's not just a checklist for due diligence, but rather a way of thinking about business that applies whether you're evaluating an acquisition or building a company with an exit in mind. And the power of this framework is that it works backwards. If you know what a buyer is going to want, you can make better decisions today. What fascinated me was Dominic's honesty about the gap between corporate M&A and entrepreneurial M&A. In the corporate world, there's structure, there's hierarchy, there's financial hygiene by default. But in the online business space, it's the opposite. The very risk-taking mentality that gets entrepreneurs to build something successful, like moving fast, failing fast, ignoring bureaucracy, is the same thing that trips them when they want to sell. They may lack financial hygiene, their numbers aren't clean, and that costs them money, lots of it. And then there's the math that stuck with me. Buyers aren't paying for potential. They are paying for what's proven. They are paying for sustainability. So the businesses that Dominic sees investors gravitating towards aren't the newest or trendiest models. They are the ones with defensible age, brand, customer loyalty, and trust. What also resonated was certainly his distinction between operating a business and investing in one passively. He really pressed home that if you want to have true passive income, you need to buy a business that's already running itself with operators in place, with systems in place. Or if you're more hands-on, you need to understand that you're essentially building the operational infrastructure yourself. Either way, it requires intention about what you're actually buying. But perhaps the most important insight, at least for me, the one I think applies far beyond online business acquisitions, is his perspective on failure and risk-taking. Dominic has worked with billion-dollar transactions. He has also worked with 19-year-olds building 7-figure e-commerce businesses. He's met space miners, VC developers, and people from every corner of the globe who've moved to take a chance. And his observation is simple. Successful people fail repeatedly. The difference between those who build wealth and success for them and for their lives and those who don't isn't intelligence or luck. It's whether they back themselves and refuse to give up after failure hits. So if you're taking one thing from this conversation, take this. Back yourself. Whether you're thinking about acquiring your first online business or preparing to exit one you've built, or just exploring what's possible in this online ecosystem, the barriers to entry are lower than you think. The education is accessible, the opportunities are real. What's missing is your willingness to take a risk. Now, a few final words. If this conversation resonated with you, whether you're exploring online business acquisitions as a path to financial independence, whether you're preparing to sell a business you've built, if you're curious about the M&A process, how it really works, or if you're simply inspired to back yourself and want to try something new, please don't forget to subscribe, like, comment, and share. You can also head over to businessunbound.co. That's where you'll find links to everything we discussed today. You'll also find ways to connect with Dominic directly if you want to explore working with him on a transaction or just picking his brain. And while you're visiting our website, I'd like to encourage you to subscribe to our newsletter to get notified the moment new episodes air. You'll be the first to know when we are dropping conversations with the next wave of forward-thinking leaders who are acquiring businesses, building wealth, and challenging conventional wisdom about what's possible in today's economy. Now, thank you for listening. This was Business Unbound for today, and until next time.